Hey, thanks for joining us today, Gwyeth. We want to start out kind of asking where you're talking to us from and kind of give us an idea a little bit about your investing journey, because I understand that investing isn't in multifamily real estate isn't your full-time job.
Correct. And thank you for having me on. I'm coming to you today from my bedroom, actually, on Long Island, in New York. A little bit of background, for me, I got into real estate investing really a few years back and started my investing journey in Pittsburgh, where you're from and my wife is from, and that's why we chose that market. We bought a duplex that then turned into us buying a fourplex, and last year we closed on a 13 unit there, with a partner that I had been and done some other deals with in town. That evolved into doing some co-sponsorship deals, investing as a limited partner in some syndications, and working towards, buying some bigger stuff with members of the community that I'm involved with, the Jake and Gino community. So that's it. It's sort of in a nutshell, and I'm happy to kind of dive in a little bit deeper if you'd like. But what you said originally that I kind of forgot was that correct. I am not full time real estate investor. My full time job is as a prosthetist. So it's not a prostitute. We make artificial limbs for people with limb loss. So for the last 10 years, I've been working for a company here on Long Island, and we're helping amputees, kind of regain their life and help them achieve their goals, with whatever that may be. And that, that could be climbing Mount Everest, which we have a patient recently do, to incorporating bionics and neurobionics into upper extremity limb loss. So it's a pretty time consuming job, and it has me at the office by 6 o'clock each morning. And I usually get back home around 5. I have a wife and I have 4 kids. So the time constraints with investing in real estate are real. And, for me, it's early in the morning, kind of on the computer doing some emails and the things I need to do at that point.
Mm-hmm.
And then at night and on the weekends. So let's take it
Awesome.
from there.
Yeah. Yeah. So let me ask you, I understand you used to be an equities trader,
Yeah.
and just how did you, I love real estate bringing this together of people from a variety of different backgrounds and interests. I know that being a trader in general, the hours are kind of brutal, and also just the ups and downs are unlike any other career. You mean even as a salesperson, that my current occupation, you have down days, but you don't have really down days.
Yeah.
So kind of walk us through how you went from equities trader to making prosthetics.
Sure. So I'll go one step a little bit before that. My first real job out of college, I was working for an old Rockefeller company in Manhattan, and I was doing international cost of living analysis. So I was taking advantage of my economics degree from school, and basically creating reports that would tell companies, if we had to move this employee, this worker from this country to this country in order for them to maintain their quality of life, their salary multiple, or whatever it needs to be decreased by, would have to be this, and we would do that by pricing goods and services across multiple markets and whatnot, and creating those reports. It was one of those jobs where you're coming out of college and you're sitting in a cubicle, and you're spending your day kind of just going over surveys, and a lot of it to me was very arbitrary. And I was ready for a change, and I knew somebody who was doing equities trading. It required getting Series 7, Series 55 licensing. So I studied for those tests, I passed, and the next thing you know, I'm working as an equities trader for a firm in Manhattan. I ultimately, met my then girlfriend, now wife, and she was teaching in Arizona. So I moved out to Arizona, still equities trading, from Arizona. So I was trading East Coast on the West Coast, West Coast time, trading East Coast hours, if you will. So it's probably where I got used to kind of getting up real early.
I was gonna say, dang man.
Yeah. And to your point, though, it was tough because during a given day you would be up, and then you would kind of lose it all, be down, or vice versa. But the thing that really was the shift for me was that I found I was never happy with how I performed. So on days when I was up, I was looking at the trades I made, and I was upset with myself because I missed, say, a big run. So maybe I was in the right trade, but I didn't optimize it.
Mm.
And I thought I should have made more money on those days where I was actually up, and I was upset. And then on the days I was down, I was upset that I was down. So I kind of had that realization that I was always upset. So that's when I started looking to see what I wanted to do, and I came across prosthetics. And I just went to visit a place that was doing it out there in Arizona. And next thing you know, I was volunteering there. They helped me get into school for it. And our journey went from Arizona to Chicago and ultimately back to New York
Wow.
on the prosthetics train.
So is there anything in particular outside of the stress from the being an equities trader that made you want to go into that career?
It was, we talk a lot about the entrepreneurship kind of lifestyle and whatnot. And even back then, that's what that was. You didn't have a real boss.
Oh.
So, you worked for a company and you had your own kind of sub account, but you were really trading company dollars. But like I said, you didn't have a boss. So, I mean, you did as well as the amount of work you put into it. So if I needed to get away and I needed to, I go up to Maine sometimes, I just throw the dog in the car and go. I didn't have to ask anybody, but I wasn't
Right.
going to make money on the days I was gone. If I
Okay.
wanted to get into work late and not do my research, not look at charts, not prepare myself for the day, I had a less likelihood of actually doing well that day. So,
Okay.
I liked having that ownership. And being in control of that and really answering only to myself. Now, granted, if I lost a lot of money and everything, they'd cut my trading limits and they'd ask for me to replenish the sub account that I had going. But really, that was like the extent of a managerial role.
Okay. Okay. So I'd love to jump in. So we have a little bit of context behind the kind of entrepreneurial spirit that you had, and you chose the Pittsburgh market, obviously because of proximity and familiarity in your family and your wife. I'd love to jump from the 2 unit to the 4 unit to the 13 unit. Why did you originally jump in for a duplex? Within the question, if you would have done it again, would you have done the duplex first? Even if you were, say, in the area?
Yeah, so I think everything's a learning experience. So I would have done it. The reason I did it back then was because I could. It's what I knew I could do. So I
Mm. Yeah.
I was introduced to a local realtor, and she's not a commercial realtor, but she worked for me and she was great. So I mean, being out of town, she would go look at places and she would tell me like, hey, this one has got potential. Don't you dare put an offer in on this one. And she gave me enough that she said no to, that I trusted her when she said yes.
Right.
So that duplex she said yes to. I had a friend in town that's a contractor. He went and walked it for me. He said yes as well. So we started negotiating it, and we ultimately got it on a contract. We ultimately closed on it. That process, the other broker that was involved in that process, he was pretty tough to deal with. So I say that, just always kind of be cognizant of who you're dealing with and who you're doing business with. So that whole process was just kind of tough and a little stressful, more so than it really needed to be. And then getting into the 4 unit, it happened pretty quickly. And somebody had reached out to that same agent,
Right.
and she thought of me and she came to me, and everybody just had a great rapport. The seller's agent was the daughter of the person who was selling this 4 unit.
Oh,
And we just
wow.
all, yeah, we just all really got along, and we all enjoyed the process. And that was kind of seamless, and it just happened.
So as an out-of-state investor, a lot of people now are looking at opportunities maybe in DFW, Jacksonville, that's whole southeast quarter. People love it. How did you pick this realtor? And is there any lessons you can impart on us about how to pick a broker? Because oftentimes we're told, start to build rapport with brokers, but it really is a two relationship. And how did you vet this realtor?
So when I said I had a friend that was a contractor, it came from him.
Oh,
She
okay.
had done work in her house, her personal house, and just said that she was a go-getter, and that's really how it happened. So I, at that time, like I said, it was, I really wasn't doing everything by the book. Um, but the fact that she was working for me and willing to go to these places and do everything, I just, I dug it, and I was like, okay, I'm going to work with you. Like, we never signed anything. There was no
Wow.
exclusivity or anything like that. But I think we just kind of had an understanding that, I was going to, I was obviously going to use her. She was doing a lot of work for me, and it all just kind of worked out well. But it came through a referral from my friend.
Okay. And so if you were to look back and say, for someone who is aspiring to be, I mean, we're going to jump into, your 348 and your 104 later, as a general partner, which is really exciting. But would you say that those little baby steps are important? And what type of investor, even more important, what type of investor would you recommend to do that versus another one that might go after a 50 unit?
Yeah, so I think you hear it a lot. Just jump into the big stuff, and everybody, I think, has a different path and a different way that they're comfortable in doing things. For me, I those baby steps, if you will, they were important for me because they were a learning lesson.
Mhm.
And what I learned on that duplex and on that fourplex, they prepared me for my 13 unit in Pittsburgh. And I really feel like I operated that one so much smoother. And had I not had those two prior to it, that I probably would have made the mistakes in the 13 unit that would have hurt a lot more than,
Right.
not kind of going through it on those smaller properties. Um, Real estate's pretty forgiving. So, I think everybody's going to make mistakes here and there. So to make them on the smaller properties is, it's easier to recover from than making them on bigger ones.
Mhm.
Um, so again, I know everybody says, just skip the small stuff and go right to the big stuff. But for me, it gave me the confidence. It gave me the know-how, to move forward to the bigger stuff. And I wouldn't change that.
Okay. Okay. So you went from these, 19 units in Pittsburgh, and you started investing as a limited partner in a couple of deals, and then you were like, wow, like this really works. Um, what A lot of times investors think to themselves, okay, I want to do all these deals by myself. And I understand you had a partner on your 113 unit, but what allowed you to jump into syndication? And maybe tell us about the first deal. Actually, you know what? Tell us about that 104 unit that you syndicated. How you went about finding it. How did you qualify it? How did you raise the equity? Just all those nuances.
Yeah, so the co-sponsorships that I had done were purely relationship based. So I was at a conference out in Denver, and I met a team, and two people that are part of this their group, and they had a place under contract that was right across the street from a property that I was a limited partner in. So
Oh,
I knew of that property. I didn't know of their property. I knew of my property. I knew how that one was performing, just purely from a limited partnership point of view. And the reason that I wanted to be a limited partner in a couple of deals was to really see how they were run, kind of witnessing it from the limited partnership side to see if that was something I may want to try to transition into the general partnership side. Um, and it was their deal. I mean, so their first deal that I got involved with was a 348, and we worked really well together. And it took a lot of work to get that one closed and to the finish line. But that's the one that then led to the 104. So they had purchased another project from the same seller, the same broker, and they weren't actively looking to for another property. But
okay.
it came to them, and they had worked well previously, and it wasn't something that they needed help raising money on. But because we had worked so well on the 348, they had offered me the opportunity to participate in the 104. So I took them up on it, and I just raised money through friends, family, and my network, and
Yeah.
that was a relatively small raise. So I mean, we filled that one up really quickly, and there were other people that wanted to invest that we just didn't have room for.
Wow.
And Yeah, so but that all kind of started, prior to that 104, really at the 348, and then prior to that, meeting them at a real estate conference.
So what I'm understanding is, in terms of your investment journey, you know, and I hope our listeners understand this too, that every individual investor that I've ever spoken with has a certain way of doing things. It sounds like you are maybe more of an analytical investor. You look at, hey, I'm going to do this 2-unit. I feel comfortable. I'm going to do the 4-unit. Now I'm going to go to the 13. I'm going to be a limited partner. And so as you kind of grew your personal wherewithal and comfortability within each stage of your investment journey, you started to be able to scale it up. I think that's really important to think of, especially as a new investor, even as an experienced investor, that oftentimes we are told, hey, you need to go and do the big unit first. I think what the real thing, most important thing is, do what you're comfortable with, because you're going to do it well. I mean, you've really scaled in a short amount of time. And it's a testament to, it seems like there's a pattern in which you operate.
Yeah, I definitely, I take opportunities as they come, and I try to say yes, to those that present themselves, but I have to be comfortable, and I have to be confident. And with regards to co-sponsorship and raising equity, I mean, I really have to be comfortable and confident, because, the biggest fear there is that you miss your projections, or the deal doesn't work out like you say it's going to work out, and you have people that are investing in this deal partly
Right.
because you brought it to their attention, and you're their conduit, to be involved in the deal. As a 506B, they need to have a pre-existing relationship with somebody that's on that sponsorship team. So I mean, you feel responsible for the money that's coming in. So yeah, definitely need comfortability, and you definitely need confidence, and you have to be, for me at least, you have to be comfortable and confident with the people running it, more so than the deal itself. I mean, the deal is obviously very important, but the people that are running the deal are the ones that are going to make or break it.
So what would you say to the, someone, Gwyeth, that wants to get into this, and, you've been doing this, everything. I mean, there are literally so many excuses that you come up with. Oh, hey, I have 4 kids. I have a wife. I'm there at 6 a.m. every day, and I get home at 5 o'clock. What do you think has been maybe a tip or something that you do that's particularly helped you be able to amass this portfolio in just a few short years?
So other than the duplex and the fourplex, everything else was done with a partner. It was some sort of partnership one way or the other. And for me, it's huge. I mean, I can't say it enough. I think when you have another person, you not only do you have somebody to kind of commiserate with, to celebrate with, but you have another set of eyes. You have, I can't tell you, going through that 13 unit, how many times it was me and one other guy. One of us would say something or email something, and we were off, and the other one would just be like, "Hey, are we sure about this?" And be like, "Oh, you're right, you're right." So we would correct each
Oh,
other along the way. There are certain things that, to this day, I do on my other properties that I learned from that person on that property, and vice versa.
right,
Currently looking, like I said, one of the things I really want to focus on is working within that community that I'm involved with,
right.
to do deals with those guys. And I'm working with 3 other people that are in that community, and we're looking at a property out in southern Indiana, and splitting up the duties. Like you said, with my limited time, I would never in a million years be able to do it all myself, and the syndication, never in a million years be able to do it all myself. But there's certain parts that I can do, and to be just a piece of the puzzle. That's how I've really think I've been able to grow the portfolio, and that's how I foresee kind of keeping on that growth path.
Right, right, right. So I'd like to jump into the, kind of the real talk, our lightning round. Ask you a couple of questions here. So what's kind of been your favorite real estate related book, or maybe book in general?
So I'm pretty avid in terms of reading these, and I was thinking about it a little bit. I usually always go back to The Go Giver, and that's usually my answer. I just think that the principles in that book, they can do nothing but help you achieve anything you want to achieve. I mean, I recommend everybody to read that book. It's a short read, and I mean, you should probably read it every every year. But I always give that answer, so I wanted to go back a little bit in
Okay.
history. So I'm gonna throw a shout out to Robert Allen, because the book Multiple Streams of Income, it was one of the first books I read that really got me along the mindset of creating other sources of income outside of my W-2. So my W-2 is my main source of income. And just to take some control, like you never know what's going to happen. And if for whatever reason that business went under, or I found myself out of a job, I'd want to be able to easily transition into something, or have money coming in from another source, as opposed to having that shock happen and then scrambling. Like, I want to be prepared for everything. So that book, it's not necessarily real estate focused, but I mean, I have a stock portfolio, so I started doing some options trading as a way to basically enhance returns of the stock portfolio. And it's a great book just to open up your mindset and give you different avenues where you could create other streams of income. So I'll give it up to him and multiple streams of income. And then I'll go for the most recent one. As I'm reading Principles by Ray Dalio.
Oh my gosh, I just put that down last night, man. That's a great book.
I'm loving it so far. I'm maybe a quarter of the way through it, but I mean, there's some nuggets in there so far that I just can't, it's great. It gets you thinking.
It really does. Go, please.
I was going to say, I'm probably going to misquote it, but one of the things that I read, and I just went back and I kept reading this one line over and over again, is he says something to the effect of, I can't tell you which is better, an intense life that's filled with accomplishment, or a relaxed life that's filled with savoring. And I just started reading that line over and over. I'm like, man, that's crazy. Because I mean, for me, I see that like I veer towards that intense life filled with accomplishment. That's where I go. But it's like, I want that relaxed life filled with savoring,
Yes. And along those same lines, Gwyeth, he has this little diagram and it's like, this kind of intense life over here on the right, and that more savory life. And there's a way to get those both, but it's about, I love how he always refers to a higher order thinking. It's like, think about yourself as a kind of a worker and a designer within the machine of your life.
Looking from the top down as opposed to the bottom up. Yeah. It's great.
Incredible. Those are gold. No, I mean, and the Go Giver, I must admit that I've never read it, and I've heard just phenomenal things about it. And I actually had a podcast with Jeans Nielsen, who is in Durango, Ohio. He's invested in multiple types of syndications, from mobile home parks to self-storage. And he raised $100 million this past year. And he also has a W-2. And he said, he said the same things. So it seems like a really good book. So what's kind of been your biggest mistake in real estate, and how can we learn from it?
I would say the biggest mistake is not having capital reserves on a project. And I go back to that first duplex, and that required some work. One of the units was going to be a total rehab. And having my wife on board, we had kind of we had a disagreement of sorts, in that she saw how much money we were putting into it, because we didn't put it all in day one. So had we had money dedicated day one to this, I think it would have worked out better. But we had our purchase price, and then we were giving the contractor, 10 grand here, 10 grand here, 10 grand here. And I was trying to tell my wife, I was like, look, 10 grand here, 10 grand here, 10 grand here. Like, bring that back to the purchase price. This is more like purchasing this property at this much money. It's just these extra installments are coming out later.
Okay.
But it took me a while to get her, just to kind of see it that way. And also on some other properties, like on that 13 unit, like we didn't necessarily have a big enough capital reserve budget going in. So we ran some of those renovations out of operations, which just gets a little tight and gets a little stressful. So I always say, just make sure you budget for and you have your capital reserves account, because if you try to do it after the fact, you do it out of operations, it gets more stressful than it needs to be. Right.
I think that Joe Fairless says that the 3 immutable laws of real estate investing, one is have adequate cash reserves, because if something comes up, worst thing that happens is you have to fix it up. Maybe brings your return a little bit down, but it doesn't kill you.
Yeah.
So what's kind of your best mindset tip, your real talk best mindset tip? I mean, you're getting up super early. How do you stick into it?
So I mean, really, it's just doing it. If you read the book, the Miracle Morning, they say for people who don't like getting up, it's like for the people that hit snooze, you're pretty much waking up twice. So if it's something you hate to do, why are you going to do it twice? Get up when the alarm goes off. For me, it's go downstairs, open up the computer. Usually I have a lot of emails to rattle through, or I'm tinkering with the underwriting on a deal or something like that. Like I usually have it set up like what I'm going to do that next morning. And you just have to get it done. There's no real secret sauce to it. It's you're either motivated to do it or you're not. So,
right. Yeah.
Do what you're going to say and say what you're going to do, and make no excuses.
Yeah, that's that. I agree with you. And honestly, the pain of regret of not doing what you say you do, it's so much worse than just actually getting through the whatever it is, because you feel like, oh wow, I can't believe I didn't do that. I'm just as guilty as that too. So before I ask you our last question, or how can our listeners get in touch with you? Maybe they're interested in investing with you or just connecting with you.
Yeah. So, there's a website. It's www.rustic-capital.com. My email is of the same name. So it's just my first name, Gwyeth, which is spelled GwYeth at rustic-capital.com. And, those are probably the best ways to get in touch.
Excellent. So what's the real talk best tip that has had the biggest impact on your multifamily investing journey?
I would go back to the go-giver. I mean, always, look to where you can, we always say like where you can add value, and it's hard to figure out at times, but it may just be an introduction, so, going back to before we started recording, you're in Pittsburgh, and, we're just talking about it, and a guy, that you met that, that maybe, me and him, should connect, and you offer to make that connection. Like that's huge, like, and I do the same thing, if I know somebody, I'm happy to pass investors along to other people that maybe, would be more well fitted for them. And even in, say, equity raising, if I'm talking to a potential investor and that investor is looking for a return, say for instance, he doesn't care about the appreciation on the back end. He's looking for a yield play, and he's looking to make 10%, annually. And our deal doesn't offer that, but I've seen some other deals come across my desk that do. And I'll say like, hey, why don't you reach out to this person, get to know this person, because they maybe have those deals that you're looking for.
Yeah.
So, I mean, I just think those things, like they'll return themselves in spades, and little stuff like that. It's not like, hey, I'm good at this, and I'm going to reach out to this person and offer him this. I think it's just a little bit more organic. Like you'll be surprised. Like there's ways you can add value that just, it could be as simple as an introduction to somebody.
I love that. I love that. And that mindset shift it is kind of difficult to think that I'm just going to give, and I'm not going to ask for anything in return. I'm just going to give. And I know that it's going to come back to me, because that's just how, and honestly, I've noticed that's how it works. But you have to have that, you got to have that heart, and you got to have that mindset that, if you give, you will receive in spades. Excellent. Awesome, Gwyeth. Well, really appreciate your time with us this morning. Listeners, please reach out to Gwyeth at rusticcapital.com. Maybe he can point you to that deal that gets that 10% return. We're all looking for it. And thanks again for joining us today.
Thank you, Clayton. Really enjoyed it.